I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, March 30th, and we saw the grain markets flying around. A lot of analysts and market participants, and including myself, thought that we'd be a little bit more of a stick in the mud today, as we see a lot of people sitting on their hands ahead of tomorrow's USDA report, but that was not the case. We saw some big technical breakdowns across the board, corn, soybeans, and wheat, and that really triggered some accelerated selling pressure. But again, tomorrow's USDA report has the potential to reverse that, and that's going to be really what the market is hinging on, and very well could set the tone going forward. If you visit our site, you can see that we've got the estimates on here, and if you're not a client or subscriber yet, you can click on this free trial link, and that way we'll be sure to get you that USDA data as soon as it's released. Another note, during USDA reports, we have a little competition called Call the Close. If you can call the close correctly for corn or soybeans, you could win either one of these mugs depending on which one that you call correctly. So fun little competition there. All the information you need here on our site. You can sign up to get that emailed to you directly. Now let's get started here. We've got corn to start. We're going to cover corn, soybeans, live cattle, and lean hogs. We've got May corn pulled up here right now, and we saw a little bit of a pullback over the last 2 days, but it really didn't do a whole lot of technical damage. As you can see here, we're still mostly range bound. This 530 area is the must hold line in the sand for the bull camp. A break and close below there could accelerate the selling pressure and take us closer to this psychologically significant $5 handle, which was also previous resistance and became support there in January. So that's going to be what we're keeping a very close eye on. If we do get a friendly report and can rebound off of this, we'd look for a potential retest at the top end of the recent range, which is 560. A breakout above there essentially puts us back in uncharted territory. So we're kind of in the middle of no man's land as we head into this very important USDA report. Now, the corn chart that isn't as constructive is that new crop contract. And we've been pretty upbeat on December corn for a while, but really a big technical breakdown here over the last 2 sessions. We had trendline support coming in from these October lows. It was broken yesterday, took us into this support pocket, which was previous resistance, and kind of the secondary breakout point in February. We broke below that, and that really accelerated the selling, taking us right towards that psychologically significant 450 handle. Previous support now becomes resistance. The bulls want to get a close back above here to feel good about holding a long position going forward. If we fail to see that, we could potentially see some extended selling pressure going forward. But again, tomorrow's report is going to be a very big one, and we expect a lot of volatility to wrap up the month and quarter. Moving over to soybeans. Soybeans, the same type of deal is corn. We've been mostly range bound. We got a breakdown below $13.90 to $14, psychologically significant in the low end of the recent range, and that accelerated the selling pressure here today. If the bulls fail to get back out above that $14 handle, we wouldn't be surprised to see a retest. The low end of the range here is support from back in January and February, and that comes in closer to $13.35. So that's going to be what we're looking at. If we can reclaim ground above $14, potentially retest the top end of the range, $14.40. So as I'd mentioned before, we're still kind of in the middle of the range that we've been in since the start of the year. Tomorrow's USDA report probably going to give us a little bit better idea what direction this market wants to go going forward, and we will put out another Tech Talk tomorrow wrapping up what the USDA says and where it puts us on the charts going forward. Now, moving over to the livestock side, we've got June live cattle made new contract highs yesterday, and this has been a very sturdy and constructive chart here over the last several months, and one of our catalysts for being friendly on the livestock markets has been money flow and fund money flow, and we've seen the funds gradually increase their positions, and cash starting to firm up a little bit last week, getting off that 114 handle. We did hear some 116 today, which is a little bit disappointing. We're going to want to see a little bit of firmer price action going forward, and to see that cash firming become more of a trend as opposed to just a new peg that we're stuck on for a few weeks. If we are stuck at 116 for the next several weeks, we wouldn't be surprised to see some profit taking here from the 5-day rally that we had here recently. So still optimistic over the long term. Near term, I wouldn't mind to see a little bit of a pullback here towards 120, and I think these pullbacks continue to be buying opportunities until we break and close below trendline support. Now, moving over to lean hogs and wrapping things up, we're in uncharted territory, and when we look for for support and resistance levels, we look at that as, where's the previous interaction between buyers and sellers, and here in uncharted territory we don't have that. So really not a whole lot to go off of. You see a lot of analysts that put out resistance levels. There's nothing up here. It's like playing pin the tail on the donkey. You're just guessing. And this is what we've been talking about for the last several weeks, is don't try to be a hero and step in front of this. Sure, there's going to be an excellent shorting opportunity at some point, but I throw hogs, wheat, and natural gas kind of all in the same bundle. They can remain irrational a lot longer than most people can remain solvent, so I wouldn't try stepping in front of this one. Remember, the top is a process, not a point. This has been Oliver Sloup with Blue Line Futures. If you have any questions, feel free to give me a call. Shoot me an email, Oliver@Blue Line Futures. Be sure to get your guesses in for call to close. You can email those to Oliver@Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.